The Oracle of Wall Street, Meredith Whitney, someone who called the great financial crisis, is out with a very interesting call. You can go ahead and check out, I think it was on Bloomberg. She had some very interesting calls about the housing market where she blamed baby boomers for not selling, not dying, and not going into assisted living fast enough, which I thought was a very interesting and sad call.
Cheaper.
But on top of that, she said that unemployment is going to 6% by the fall, which I thought was interesting. And I wanted to talk to Taylor from LifeGoal Investments. We're going to skip all of the real estate stuff because that is not his world. But we are going to talk about unemployment going to 6%. Does he see it? What happens if? And where do we go from here? So, Taylor, I don't know if you saw it, but Meredith Whitney, the Oracle of Wall Street, is calling for 6% unemployment by the fall. What do you think?
So credit where credit's due. Meredith Whitney did call the great financial crisis, and she got ahead of that and gained a lot of fame and notoriety for that. She subsequently, and at the time I was working for a firm that was big in the municipal bond space, called for a complete unravel of the municipal bond world in 2011, was on 60 Minutes. And municipal bonds actually took it on the chin based on her analysis on 60 Minutes, and nothing came to fruition there. So she's 1 for 2. And again, I don't know all the other calls that she's had along the way. Will she be 1 for 3 or 2 for 3? I think it's really hard to put your numbers on 6% unemployment by the fall. So we got 3-4 months to get from 4.2 or 4.3, wherever it is now, to 6%. That would be dramatic.
Yeah, and again, let's put some dates on this. I'm going to call the fall October. I could call it September. We're going to call it October just to give her an extra month. Even if you called November. So we've got 5 or 6 months. And in order to go from 4.2 to 6%, that's millions of people. And, the weekly unemployment, is around 222 last week or whatever it was. No big dramatic increase. That weekly unemployment number would have to go from, let's call it 220 for round numbers, probably to 600,000 or 700,000 just to have a chance of, it's hard to move it ex a pandemic where you shut the economy down. That certainly could do it.
Right. Yeah, my brain doesn't work quickly enough, but there's 163 million people employed in the United States, roughly speaking. So 4% unemployment. You're at roughly 2% would be 32, 64 million. And I guess this is what I was looking at was employed people. So essentially, you're going to start to stream off the top. It's hard to get to the numbers. To your point, my brain isn't good enough to do mental math like that. But at the end of the day, unless you lock up the economy, a 2% move in unemployment, and it's different. A 2% move from something that's going from 4 to 6 and then 6 to 8. Yeah, right. You can see that because unemployment does snap higher quickly. But for it to go from a stubbornly low rate to 6, you got to see some serious chinks in the armor. And there's an argument to be made, I guess, that, listen, if tariffs remain on, layoffs are going to come, global economy starts to lock up, gridlock, sand in the gears, et cetera. And that maybe gets you there, but it has to start getting there very, very quickly.
Yeah, in fairness to Meredith Whitney, she did make this call pre-China announcement. At least that is my belief. It was probably recorded earlier. Again, when I kind of played out the worst case scenario, I could get to 6% unemployment. I certainly could. Like the worst case scenario, like, tail risk, 3 standard deviations. It is certainly a non-zero chance. I just think it got extra hard after the China announcement. Because again, I think there was a lot of companies that were staring at layoffs and bankruptcies in 30 or 45 days that frankly aren't now, right? Yep. A 30% tariff feels a lot better than a 145% embargo, which you can't do anything with. So I think a non-zero chance got cut in half or even more with this agreement over the weekend.
Yeah, and let's just talk quickly about one thing too. Like right now, there aren't many people getting laid off. right? So firings are actually really low. It is tougher to get a job, and job
Yeah.
openings are reducing as well. So people are
Correct.
hiring more slowly, putting job postings out more slowly, but they aren't firing. And the reason they're not firing is because 2 years ago, 3 years ago, they were paying tooth and nail high, ridiculous prices to bring someone on board. So the last thing you want to do is fire and then go back through that round of hiring where, then you're competing and bidding against other folks for payment well above what that person's in all likelihood worth, which is what they were doing 2 years ago.
Yeah. The other thing I think about when I hear about a 6% unemployment call is what's happening to the overall economy. And I think it's fair to say that we would be in a contraction, right? Because again, the other thing when you think about consumers, when layoffs explode, a million and a half people, whatever it is, it starts to dent the psychology of people who are employed, right? Because again, they fear losing their job as well. And we would have to have, it would have to be bad. It would have to be like -2%, -2.5%, probably for multiple quarters. And I'm pretty negative on the consumer right now, but I can't see -2.5% GDP.
People do this, right? When I say people, like Meredith Whitney, she is famous and she gets notoriety because she made the call in the great financial crisis. And there are so many people that made the call at XYZ point in their career, and they persistently make the call over and over and over. And it's like a broken clock is right 2 times a day, right? At some point, you're going to be correct. And when you were correct once, and who knows how many big bombastic negative calls she had prior to that one.
Right.
So, those ones get forgotten about. But when you do call something correctly that's big and seismic like this, you get famous, and then you can do whatever you want and make money. You can sell, sell conferences and go speak, and people will pay you an ungodly amount of money. But again, the municipal bond market, which she called for absolute cratership of in 2011, has done fine.
Yeah, it didn't happen. Well, the last thing I want to talk about is, again, let's just play with this a little bit. Let's say she's right. Again, let's say unemployment takes the elevator up at a record pace to 6% by October. Even if you want to say November, so be it. Probably going to have 2 quarters of negative GDP, probably 2.5, maybe even 3% negative GDP if unemployment skyrockets that fast. What does the Fed do? And when do they do it if that happens?
Oh, they cut viciously, like viciously. There's no way around it because, we've been ongoing making the point that inflation is not really the big boogeyman that folks think it is with tariffs. It's more about demand destructionary. So if we're right on that call, and I think that conventional wisdom also says that as well. When you look back where it's at when tariffs were initiated, it was not an inflationary problem for the most part. It was more of a economic contractionary problem. So if you don't have inflation and you have this meaningful seismic pop in unemployment, they start whacking, they start printing, whacking interest rates lower, they start printing, they, unload the war chest.
Yeah. And again, I think if we get on a path to 6% unemployment, we have to start seeing weakness like right now. So I'm of the point that we could get rate cuts. Again, this is not my call. I want to be wildly clear on that. But we could get rate cuts June, July. We can get rate cuts at every meeting. And some of those rate cuts could be a half.
Yeah.
Right.
They would have to be a half. They would have to be a half. If we're going to 4 months out from now be at a 6% unemployment rate, that is something that it's not going to snap higher 2% in a month. Right.
Right.
It's going to start to climb, and then it can snap. But we don't have the climb in place right now. So typically you get a climb incrementally and then a snap, unless you're in COVID and literally they go, okay, our economy can't exist right now. So stop working.
We're not doing that again. So let's try to put a number on this together. I'm going to call the Fed funds rate 4.25 today. Yes, I know it's 4.25 to 4.5, but that's just geeky stuff. Let's call it 4.25. What do you think the Fed funds rate is in November? If we have 6% unemployment, we've got a negative GDP of 2.5. What is the rate?
Sub 2.
Yeah, I think so. I think so as well. I don't think it goes to 0. I think we've learned that lesson. At least I hope we don't go to 0. But yeah, sub 2 is a good call. I call it 1.5 to 2. It kind of feels like a good place to be.
Yeah, I think that is wildly pessimistic. But again, coming from the mouth of someone that has been wildly pessimistic persistently in her career and has had some good calls along the way. But again, the broken clock.
Yeah. So again, I think both of us can say we don't see that as likely. Right? It's neither of our base case, but I don't think either of us are saying it's a 0%.
No, we aren't. No, we aren't. Because again, how much did the economy lock up in the past month with tariffs? Because if the economy locked up, and then again, to your point, neighbors start to see that their friends got fired. And then also, let's not put CEOs on this high and mighty pedestal of saying they don't look around and watch what other companies are doing and act fully independently. No, they would be looking around. Meta would look at Microsoft would look at Amazon like, oh, they're firing. Yeah, we better start to tighten this belt some.
No, that's what happened last time. Yeah, a couple of years ago. Well, this is always fun. I appreciate our Monday chats. Where can people find you?
Yeah, find us on Instagram or on TikTok. We are at LifeGoal Investments.
Folks, give him a follow. He puts out amazing stuff in 60 seconds. I still don't know how he does it. Later.
You're the man.